go the opposite direction, or respect it, go the same direction. Go on about your business. It's not easy. The object of trading is to survive the day.
Audience, welcome to the Topaz Room, where Cilver.eq says his life views Labrador right overseas. The show's running smooth to family, friends, and those brand new. Hey, welcome to the Topaz Room.
Stock market, bond market, what can I say? Money, capital, investment, life savings. JP Morgan Chase created the market through a series of investments, capital ventures, thus financial activities of leveraging, borrowing with massive client data, created the world's largest bank. And also U.S. industrial and financial growth, consolidating industries and establishing major financial entities, millions of orders into the market that is now $6 to $7 trillion a day. All that to say is there's money in the market, depending on which market you want to enter into. Starting off with bars, I'm not rhyming here. Red light, green light, 1, 2, 3. It's not a game, y'all. It's serious money making business. All different types, shapes, and sizes of them. It's important to read them carefully. Bearish and also bullish candles, they open up differently, they close differently, they're the opposite of each other. Let's get that down pat before we start moving forward. Green is bullish, uptrend. Red is bearish, downtrend. They open, we call it candlesticks. There's 3 types of folders: yellow, orange, and red. Yellow, the normal reports. They don't move the market. They the regulars. Orange folder is medium. It may shift the market, house markets. The red market, be on alert. Whenever you see red, watch, see. That's going to be a high volatility. NFP, CPI, interest rates. If you're looking for the pattern, 3 candles in a row, the second will create a FEG, which is fair value gap. That's a key area. It shows the direction of the trend. The market will retest the FEG, either reject, go the opposite direction, or respect it, go the same direction that the market would retest. Liquidity sweep, aka grabbing liquidity, depending on where the market is in market structure, retrace or reverse the opposite direction, leaving people in drawdown. Drawdown is never a good thing. A whole bunch of negatives on your account in red. Yeah, it's time for a stop loss. It's time to get out of that position. Support and resistance. Support is the floor. We looking for buys. Resistance is the ceiling. We looking for sells. If the line breaks above the resistance, the old resistance will become support, and then there'll be a new area up above for resistance, because the market might retrace back to that level. There's 4 sessions in the Forex Market, 24/5, and crypto runs 24/7. The first session is Sydney. Starts either direction, bearish or bullish. A quick burst move, and after that it just consolidates. Speaking of consolidation, Asia is the king of consolidation, which means it ranges like a ping pong. Typically takes out the high or the low of the NY session, New York session. Goes the opposite direction after it does either one of those. London could be bearish, could be bullish, but it's a sharp trend momentum, usually taken after Asia. New York, the highest volatility of the day. When it opens up at 8:30 Eastern Time, the market is going to be very choppy, fast paced. Keep your head on the swivel. You don't want to get stuck in drawdown. We got 3 types of traders, not in any particular order. We're going to start off from shortest to tallest. Sniper, the scalper. Within the market, seconds can leave up to 5 seconds, but it's usually a short duration. Pip and dip. Enter into a door, exit out the door as fast as you can. We got intraday trader, a medium, a little bit of both. They can stay in the market longer than a scalper, but usually when the market is about to close or ends, they're out of the market. We don't want to pay any swap fees because we're not trying to give anything to the brokers, the prop firms, or any of that. We're trying to cash out on our money. The last one is a swing trader. Swing traders usually hold their trades days, weeks, months, and watch it play out. Very patient. There's various markets that you could look for. We got commodities, which is metals, gold, silver, oil, energy. Next, we do have stocks, the individuals, the Apples, Google, Microsoft, Nvidia. Indices, US 30, XPX 500, NAS 100, similar to index funds where it's just a pool of stocks. And another popular one that people love is cryptocurrency, Bitcoin, XRP, Solana. And through these brokers or firms, you have CFD, which is contract for difference. So even though you enter in a buy or sell, not everybody enters in at that particular point. Each firm or broker has their different levels. So somebody could be at, let's just say 50 while you're at 52. It's a slide of their hands. It's like a card trick. There's 8 major pairs in the Forex market. We do have other pairs. They don't pay out as much. At the end of the day, we want to make money. We have 8 pairs. We have Euro currency, Europe, NZD, New Zealand, GPY, London, USD, United States, JPY, Japan. We got Chef, Switzerland, AUD, Australia, CAD, Canada. We're reading from left to right as if you're reading. The first group of letters of a given pair is the base. The second group of letters is the quote. It's based off a value of 1. The left side is stronger than the right side. So in this case, we have EU, short for European and United States. It's either going to be bullish, bearish. Sometimes it can react off to the news. Usually a red folder, sometimes an orange folder. But majority of the time, it's algorithm that moves the market. We got GJ, London and Japan. Could be bearish or bullish. This pair right here pays out a lot. Heard through the grapevines. Any pair that doesn't include the USA is a cross pair. Any other pair, any of the 8 countries in it, they're exotic pairs. Doesn't pay out a lot. Strange money. All I'm trying to do is make money. I ain't gotta count it. It's all day money. Typically in a market structure, we also have another term called the trend is your friend, aka go with the flow. W for weekly, D for days, H for hours. We have 4, 3, 2, 1 hours, 15 minutes, 5 minutes, and we have seconds. Price is fractal. The smaller time frames, the 1 minute, the 3 minute, the 5 minute, will build up to the hour, the 4 hours, and also the daily. If you take the average of the bar from top to bottom and you split it in the middle, that's where your average or your equilibrium is, especially on the daily. So buying is you're purchasing that item. Selling is you're giving away that item. A buy limit is you're waiting for price to hit a certain mark. That price activates. You want to buy up because you think that's the discounted price. You want to buy up. Buy at a discount and then sell at the premium, and sell at the premium for the discount to get money. To the left are the search bar where all the different markets. You have the market that you're in. You have the times. You have the indicators. To the right of the screen is the prices. If you look below it, you have open, close, and your balance. You have buy, sell, buy limit, sell limit. The bottom is your current trade and data. The market moves up and down. All the great traders, you can predict the market. Where is it gonna go? But you have to react. Called candle maturity. Let's break it down. The last 15 minutes of a candle or 10 minutes of a candle will show you the trend that is gonna go in. Be patient. Let it close. So if it's 8:45, it's dangerous to go in. Wait until the 9 o'clock close. Once when the candle closes every 15 minutes, it's not gonna go back to original form. It's sort of like you're gonna fry an egg. The egg is in a container. As soon as you put it in the hot frying pan, it's not gonna turn back to the same oval egg. It's gonna be fried. It's gonna be scrambled. Everybody has their own way of frying eggs. I just named the popular ones that I like to have my breakfast in. The market will tell you the direction that it wants to go in. It's up to you to be patient, be disciplined. Anxiety involved, especially when money's on the line. People say that it's sort of like betting, but I think it's edging, which means you're taking an educated guess of where the market is gonna go. So you wait for the consolidation. There's a couple of movements here. You could put a sell limit also. If we fast forward the chart, sell limit works in the opposite direction of a buy limit for you to be out of the market. Just as if it hits stop loss, if it's stomped out, loss. Not every trade you're gonna win. I know we all want to win in this game. You can predict, you could do a bunch of analysis, key areas of resistance support, but ultimately you just react of what you see. Hope, I repeat again, audience, hope. That's a tough word in this trading industry. Because even if you enjoy down and you hope that it goes in your direction, more time you hope, the more time that you losing. Might as well get out of that trade, exit that trade, and go in the direction. When we hold on to trades, that's how we blow accounts. Stop loss happens. We lose a lot more. If you have a $300 account, I'd rather lose $3 than lose $50 in that one trade. People over leverage because you're trying to get the fast money, the quick money. It's not easy. The object of trading is to survive the day. You get interest on your savings. They gain 1 to 3%. However, it's paying more than the banks. So low key, the difference between live capital and prop firm funds are live capital is your actual money that you put into. Now usually it could be paid by debit and then it goes into Coinbase or some cryptocurrency of your choosing, and then it's the waiting period for it to clear, and then it goes to your broker or firm. Prop firms help you out in, they give you large amount of capital because not everybody has 100,000 savings or 75,000 savings. So you're able to leverage a lot higher. The risk to reward ratio may differ depending on what your lot size. Your lot size is your position in the market. It starts out at 0.01, but every time you increase, the leverage of your account goes higher. Anybody could click a button to enter. Not everybody understands the power to exit a trade, even if it's not going in your direction or even if it is. TP is take profit, so you don't always have to just stare at the screen, go on about your business, and you have to set a stop loss. People, understand stop loss will save your account. I know we do not like to lose money. EQ, why you keep talking about losing? Because we live and we learn. I'm trying to save everybody that's listening from what I didn't do. If I put a stop loss to majority of my accounts and the market's been good to me. So in this example, we have where I entered in. So in this market, I'm trading gold, which is XAU US. My entry is 5020.00. My exit is 5030.00. I have the time, I have my lot size, I have my TP, which is 5040.00. My stop loss at 5010.00. So just patient, and I didn't wait for the market to go up to my TP. I just took it at 30. All in all, it's all about strategy. I know we love to look at the screen and see green as if we're profiting, but strategy and having a system, all you have to take into account. Usually you will read from the left, which is the history. If price is at a key level of resistance or support, you want to look to the left to see what was the high and low of the day, of that hour, of the week. And all this takes place in your brain, where it's just you and the chart. You have individuals out there that you sign up and you pay money for signals, but ultimately they're not always gonna give you the signal right on time, because when they give you a signal, sometimes the market is moving right then and there and their numbers are off. It's just up to you to read the chart. If you want to know where price action wants to go.
Audience, thank you for watching the Topaz Room. Audience, stay tuned from the Topaz Room.